Hello, Tier Noughts, and welcome to this daily market commentary for the 12th of September. So I was about to say November, September, wishing my time away. Apologies for there not being a commentary for the last couple of days. One thing you can almost guarantee at this time of year, at least in the northern hemisphere, as kids go back to school, and the first thing they do is bring a nice bug or cold or flu or something home with them. So I'm sure he's been on the receiving end of that for a couple of days, but feeling a bit better now. So back to commodity duties. So as Thursday begins, the market receives some welcome news that the US has suspended increasing tariffs on 250 billion of Chinese goods as a gesture of goodwill. We've seen a little bit of a thawing of relations over the past week or so, and this is another step in the right direction. The initial market reaction, not unsurprisingly, is a rally in equities, as well as dollar yen hitting a high of 108.16. However, as the European day got going, dollar yen drifted back to 107.80 as euro rallied up to 110.30 ahead of the ECB rate decision. It seemed like a little bit of a short squeeze before Mr. Draghi and co got going. Elsewhere, the FX market was pretty quiet during Asia and Europe, with cable consolidating around 123.30, Aussie at 68.80. Crypto markets were generally higher to start the day, with Bitcoin recovering from yesterday's low of 98.90 to trade up as high as 10,130 at the US Open. So, all eyes on the ECB to start the day. What would they do, and potentially more importantly, what would they say? Central bank announcement days can be particularly volatile. Sometimes I guess when they do absolutely nothing and the market expects them to do nothing, they could be a bit of a non-event. But when there's certainly a degree of uncertainty around it, and I know, recently with all the central banks talking about, lower rates, the market has expectations, they get a little bit carried away and otherwise. So this was always going to be a volatile day, and it was a volatile day. As expected, they cut the deposit rate by 0.1%. And they also launched a new bond buying program, which has traditionally been known as QE, or quantitative easing. Initially, euro dollar jumps from 110.30 up to 110.64, but then takes a slide south pretty rapidly down to 109.60 initially, and then we make a low of 109.27. Keep the number in your head. US Treasury Secretary Mnuchin announces the Treasury is seriously considering issuing a 50-year bond. That sees the 10-year US slip to 1.68%. Gold rose up to 15.17, and equity futures start to slip a little now. Euro yen is now almost 130 points from its highs, slipping just shy of 118. And then the news conference gets going, and Mario Draghi unsurprisingly alludes to increased downside risks, which obviously is the reason why they cut rates and introduce more QE. Euro dollar drops down to 109.27, euro yen to 117.55. Gold goes the other way, is now up to 15.24, and we've seen sterling slip to 123, Aussie to 68.70, and dollar CAD move up to 132.10. Then President Trump cannot resist an early tweet. We know his love of all central banks, including his own, of course. He claims the ECB have successfully depreciated the euro against the dollar, whilst the US, quote-unquote, sits. You do rather wonder if that's a little bit of a veiled threat. Are we going to hear more conversations around intervention? Who knows? But all of a sudden, we get a very, very sharp bounce in the euro. 110.27 becomes 109.27, screams back above 110, all the way back up to 110.65. We've got euro yen all the way back up to 119, sterling up to 123.40, all in the space of 10 or 15 minutes. Absolute madness. US stocks have been poised to open moderately higher, which they did, but they were soon back to flat as the euro rallied. And the US 10-year yield is back up to 172, go back down to 15.15. Up and down, all over the place. No rhyme or reason, but a very, very choppy and volatile market in what really is the most liquid FX pair going, and obviously dragging everything else with it. But we're not done yet. Next is a report claiming the Trump administration is weighing an interim deal, trade deal with China. That sees dollar yen back up to 108, euro yen now up to 119.50. The Dow is immediately up 140 points. The world is looking great. And then the senior White House official denies the interim trade deal, and dollar yen is back to 108.70, and the Dow comes back off 140 points. Euro dollar drops back from 110.65 to 110.30. And you're thinking you've got to be done, right? But no, back comes stocks. Dow at 120. Euro heads up to a new high of the day at 110.87. Gold back down to 14.98. Dollar yen back to 108.10. Finally, the volatility decides to take a bit of a rest during the New York afternoon, with dollar yen closing near its highs, euro around 110.70, and equities held on to most of the gains, not most of the gains, held on to about half their gains, with the Dow Jones ending up just 45 points to end the day, and the S&P and NASDAQ also up a small amount on the day. So a really, really volatile day, and volatile at a time when really the ECB kind of really gave us what we were expecting. They got the deposit rate cut by 0.1%, which we expected. The market had pretty much taken the fact that they were going to do some more quantitative easing. Weren't quite sure of the amount, but 20 billion had been a rumored number, and yet we got a sell off of 140 points and high, and then a bounce back up from 150, 160 points off the low. So really quite an extraordinary day, I suppose, from that standpoint. So turning to a technical picture, when you get extreme volatility, sometimes technicals can go out the window. What we got today actually was quite the opposite. If you look at this hourly chart we've got in front of us here, we can get a very clear picture of the day's volatility. We see this extreme drop off. Just for those of you actually watching on the video, we're going to have this drop off here, and then this immediate bounce back up to make a new high on the day, 110.87, and then to settle down around 110.65. But what you can see from here is we have made a double bottom at 109.27 to the point. Okay, stopped dead in its tracks at the low from the other day, which I find very interesting. So, if that was the level you were watching, it held. And I think, the direction from here is very, very difficult to tell. When you get that sort of volatility, we've had two attempts at downside, now we've topped out around 110.87. Beyond that, there's a real resistance now, sort of 111.62. You can see from this line here how it's been a little bit of a pivot. We've broken up through here, come down a couple of times, held, broken through sharply, a couple of attempts to break back up, didn't go through, come off, through, and then back down again. So, it's a lot of noise, and that's the thing when you're trading, you've got to be able to get through the noise. So for now, your support's at 109.27, your resistance is 111.62, 63, and pick your levels in the middle. And with that, I hope everyone survived the volatility on the day. It's feast or famine. You get quiet markets that don't move. We get markets when they just go a little bit too silly. So have to tread carefully when you get those nights today. Anyway, with that, I wish you a successful Friday, and look forward to talking to you tomorrow. Cheers.